Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, June 26th. Rather quiet two-sided trade overnight across the ag space as we approach the pause. Corn prices are steady to about two better. Mixed trade in the soy complex. Beans are within about a penny of unchanged, down a buck or two on the meal, while bean oil is down 5 to 10 points, 1 to 2, 1 to 3 lower, let's call it, in the wheat. Outside of the sharply lower U.S. dollar, fresh news is somewhat limited. The dollar index has fallen to its lowest level since March of 22, ahead of a slew of economic data later this morning. Export sales also later this morning. Yesterday's EIA data showed ethanol production last week dipped to 318 million gallons. That was slightly below expectations, however, above the pace needed to reach the USDA corn usage forecast for a fourth consecutive week. U.S. weather remains mostly favorable for crop development. 24-hour precipitation maps continue to show rain totals stacking up here across the northwestern third of the corn and soybean belt. Rains through early part of next week will continue to favor the central Midwest, with lighter amounts for the eastern corn belt and even lighter amounts for the far western corn belt. Extended forecasts through the first full week of July show an above normal precipitation pattern to continue, with temperatures essentially seasonally normal. Quarterly stocks and acreage data on Monday. Average estimates do not expect significant changes to the acreage mix from the March intentions report. For stocks, I've got corn inventories on June 1st at 4.655 billion bushels. That's versus the average trade guess of 4.641. I've got beans at 966 million versus the average guess of 980. And wheat for ending stocks for 24-25, I've got at 850 million bushels, up from the current USDA forecast of 841. My figure is also above the average trade guess of 836. July cornet has made a new contract low the previous three sessions. However, so far, at least in the overnight trade, has held above yesterday's low, setting up a little bit of a bounce. Next support is the fall low at 399, that on the spot weekly chart. D's corn did carve out a new contract low overnight before recovering. Speculative traders, they sold another 11,000 contracts yesterday, stretching that short position out to, we've got at about 216,000 contracts. That's the largest since August of last summer. Current price levels, in my opinion, are discounting record production in Brazil. The USDA is currently forecasting 130 million metric tons, well below the 137 from 2 years ago. Current prices also discounting record yields here in the U.S. Higher blending rates in Brazil will provide a small offset for the higher production. Inside trade for July beans overnight, as prices have closed lower for consecutive sessions. New lows for the week overnight in Nove beans, however, continue to hold just above their June lows near 10.15. Bean oil continues to narrow up the gap left from last Monday's limit up trade. Fresh 9-year low for spot meal overnight, as speculators are sitting on a record short position. Chinese importers, they've reportedly booked 30,000 metric tons of Argentine soybean meal. This is their first purchase since approving meal imports from the South American producer way back in 2019. July wheat in Chicago, that's challenging the June low at 522 and a quarter. Inside trade for both Kansas City and Minneapolis futures overnight. ICAR did raise Russian wheat production forecast to 84.5 million metric tons, just above the USDA, and Sav Econ at 83. Thanks for listening, everyone. Have a great day.